try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been Go. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto. This is your morning show where we bring you the latest and greatest in the Bitcoin and cryptocurrency markets. We bring you the latest Bitcoin technical, on-chain, and fundamental analysis. And today, we are going to be talking about the new testnet that just went live over with Ethereum. And we're also going to be talking about how the European Central Bank, as anticipated, has just come out and said that they are going to be raising interest rates for the first time in 11 years to 25 basis points. That is going to have huge implications on the European continent, and Europe and the United States Federal Reserve, having a meeting coming up on June 15th, just showed us loud and clear why Bitcoin. For all of our believers in Bitcoin and crypto, this is the stream for you, because we're going to be highlighting some very important fundamental developments on Bitcoin, Ethereum, and the broader financial markets, and why all of them lead back to the good news of Bitcoin, if you will. If you will, make sure to hit that like button and subscribe to the channel. And by the way, give a warm welcome to our co-host for today, T-Shroom. How you doing, T-Shroom?
Well, surprisingly, I'm doing better than I deserve.
Wow. You gotta say it like this. Better than I deserve, Jebb.
That's right.
Like that.
I saw a video.
We're also joined, as always, by the interrupting Smay. How you doing?
So
No, I'm joking. I'm sorry.
Go back. Finish what you were gonna say.
Better than I deserve, Jebb.
Better than I deserve.
I was watching a video of Dave Ramsey. It popped up on my feed, and he was like, he was like, "Your car payment is what?" It just made me laugh. It was a great video. Anyways,
you're paying $800 a month?
No, it was actually like $3,600.
Oh my god!
What in the world? What, do they have a Lambo?
But then here's the
Like
reveal. Here's the plot twist. He says, "Son, what's your income?" And he says, $325,000 a month. A month?
Oh, okay, yeah. I mean, that's 1% of your income. I guess you can afford a $3,600 car payment.
So, anyways, I just wanted to say I'm very pleased that the Celtics won last night. I'm so disappointed in myself. I actually ended up falling asleep because I had not slept the night before. I ended up falling asleep and I missed the game. But I watched all the highlights. I watched tons of videos. I woke up at 1 a.m., filled myself in, and I was so pleased to see that the Celtics pulled it off. And I will not miss another game. I will not do that, no matter how tired I am.
How many games are left, and how long until we know who's going to win?
They just need to win twice. They just need to win 2 more times, and they've won the NBA championship, and that is so exciting. But anyways, back to you, Jebb.
Then they're going to get that Heisman Trophy when they win. It's going to be great. Guys, we got a lot to... I'm sorry, Smay. I just had to. I had to. You know?
Do you know what the NBA trophy's called?
The NBA trophy?
No, it's the... Do you know, T-shirt?
I actually don't.
It's the... Larry O'Brien Trophy.
You mean to tell me that nobody's ever called it the Heisman Trophy, the NBA Trophy? I guarantee you somebody's called it that. So it's called the NBA Trophy. I was right. What
like you just did.
Exactly. See, somebody calls it I'll call it the Heisman Trophy and just confuse everybody. Anywho, we're way off topic, guys. We got a lot to cover today, so give me 1 second to get it up, and then we're going to jump on to CoinMarketCap. All right, let's jump on over here. Bitcoin trading right now at $30,171, up 0.2% on the week. Down 2% on the day. Ethereum's also down a little bit. We do have news coming out, as we're going to talk about a little bit later, on Ethereum's testnet. Ropsten, I always fail to pronounce this. I believe I'm pronouncing this correctly. Ropsten testnet has completed its merge. The first testnet dress rehearsal sets the stage for Ethereum's pending transition to proof of stake. It looks like we may end up seeing the proof of stake transition sometime in the next 10 years instead of in the next 20, as we thought we may. Before we move on and read through the rest of our market pulse, I do want to bring you a word from our sponsor, Hedge. They're a payroll conversion solution that allows users to automatically convert their pay, W-2, 1099, commission, etc., from fiat to crypto, like Bitcoin, Ethereum, and Litecoin, via direct deposit. Hedge eliminates the need for the traditional exchange experience and streamlines the process from pay to crypto wallet in one seamless application. This non-intrusive design enables companies to keep their current process flow and HR service providers with no setup fees. They release custody of assets the same day as payment, as well as the freedom to be sent to any wallet. They believe in the decentralized aspect crypto brings and want to maintain those values by allowing individuals individuals to use their assets as they please. In essence, if you want to dollar cost average into Bitcoin and automatically buy Bitcoin, Ethereum, or Litecoin, then you should set up an account with Hedge so that every time you get paid via direct deposit, you automatically convert some of your pay into Bitcoin and cryptocurrencies, and then Hedge will automatically route it to a wallet of your choice. It's a great way to set aside some income before you start spending it on other things for investment in cryptocurrency. Dollar cost averaging is a wonderful idea during a bear market like this one. So let's go ahead and take a look back here at CoinMarketCap after you check out gethedge.io. The link is in the description box down below. Luckily, Tether and USD coin are trading sideways, as they should be. Hopefully that continues. Binance sitting at 290. Remember, we talked about yesterday how we could go down to 250. We talked about how Binance coming under investigation by the Securities and Exchange Commission could be one of the biggest hurdles that anyone who is investing in Binance could face. Cardano sitting at 64 cents. I do still believe that you're going to see Cardano rally above 70, maybe up above 80 in the next few weeks. That is, of course, contingent on what Bitcoin does. That has been a contingency, a if-then statement that we've been monitoring for quite some time. Cardano could go into a rally, but it's going to take Bitcoin maintaining above $30,000. It might even take Bitcoin going into a small rally, as we expect that it should. Solana's up today, Dogecoin trading sideways, and Polkadot trading sideways as well. All in all, this is a fundamental day and a day full of fundamental stories, not so much a day about price action, because the price is not doing a whole heck of a lot. Now, as far as the market pulse is concerned, let's go ahead and jump back over here to Ropsten testnet. The merge has been successfully completed. They successfully merged as proof of work execution layer with the beacon chain proof of stake consensus chain, a process identical to the one that the main Ethereum network will undergo in just a few months if all goes well. Essentially, what they are doing here is testing the merge so that when Ethereum merges with its new beacon chain for the sake of transitioning to proof of stake, then they want to know how that's going to occur. This is a scientific test to ensure that the main Ethereum network, which currently holds $217 billion worth of valuation, is merged appropriately. This is the kind of move that you need to be very careful about and make sure that you don't mess up, because it's not something that you can really take back. We got some more stories to read, but first we need to read some green names. May, take it away.
Yay, green names! Whoa. Green names. Don't worry, guys. I'm not gonna sing it today. I have
everyone.
I have Despite Zarka, Cyberfix Online, SEO by Bradley Kellum, Papa Kellum. Shout out to you.
Papa Kellum.
Sultan of Salt, Win Peoples, Grand Roofing Incorporated, Brad Geidel. Shout out to you. Jojo, Elliot Locke, Kenny R. Why You Loud, Corey,
because I want
Siobhan Golay, Groovy. Silent.
Selene.
Silent. Just Ray. Well.
Just Ray? Okay.
Just Ray.
Hey, Just Ray. Hey, Ray.
Hey, Ray.
Not Raymond.
Just Ray. Hey, Just Ray. What's your last name? Oh, never mind. It's Just Ray. Anyways, that's all I have, guys. Anyways, back to you, Jeb.
Woo! Thank you, Just Ray. I appreciate that. Let's go ahead and jump here back into our articles. We have another article here that we want to run through in the breakdown, and then we're going to talk a little bit about Ethereum during RTA. We're going to talk about Bitcoin too. Why Grayscale's Bitcoin ETF could actually get approved. Now, this is a pretty big story because, as you guys know, Grayscale has come out and basically said, hey, if we don't get approved for a spot ETF, we're going to come after the SEC in court, because there is no reason that we should not be seeing a spot ETF for Bitcoin at this point. The markets are mature enough. We should be having a Bitcoin spot ETF, and Grayscale is ready to wage war against the SEC if they don't allow it through. And something interesting that just happened here is Grayscale actually brought on one of Obama's former lawyers, and they even came out and said, that a real evolution in that there has been a real evolution in the thinking that we've seen from the SEC. So they do see the SEC making steps, but the CEO also says this: historically, there were no ETFs around Bitcoin allowed to come to market, and a couple of months ago, they allowed the first Bitcoin futures product to enter into the market. We talked about that. That was a huge development for Bitcoin. Historically, the SEC has said they had concerns over the underlying Bitcoin market. Was there a fraud? Was there manipulation? Was there enough surveillance of it? Well, all of these things have, for the most part, been answered. Many of these concerns have been addressed. Is there manipulation? Perhaps, but likely no more than there is in the stock market. Probably even less, to be honest, because you don't have new products coming out that insider trading can be done through. Was there enough surveillance of it? Well, Bitcoin's an open blockchain. That's an answered question. Is there fraud? There's going to be fraud, but it can be minimized extremely. That is something that can be tackled in a market that is mature as ours. The CEO claims that the SEC is treating favorably futures products as opposed to spot products, which could be proven to be against the law. If the SEC can't look at two like issues, the futures ETF and the spot ETF, through the same lens, then it is, in fact, potentially grounds for an Administrative Procedure Act violation, he said. Who is the SEC protecting by not approving this product? Sonishin questioned sharply. It is very rare that you see asset managers and companies asking for a regulator to even further bring their products under their purview. The SEC's inbox is packed with letters written by investors who want this ETF to be approved. The company has seen this as a positive sign and believes it is significant enough for the SEC. It's significant enough that the SEC has solicited public comments on the decision. So the point is here, Grayscale is ready to put up its boxing gloves if it doesn't get this thing approved, because we have been wanting a Bitcoin spot ETF for years. And in 2017, when it was starting to become a big issue, there was an argument to be made that, okay, the SEC doesn't really understand this. There's not enough precedent. It's not an old enough technology. The technology's 6 years old, 7 years old. Or, well, it actually would have been 8 years old. It's only been around and in the public eye for a year or two. We don't know about this. We don't really want an ETF. Now, Bitcoin has been in the public eye for over half a decade. It is a very mature industry compared to where it was, and holding back a spot ETF at this point is starting to look more and more as an attack against the industry rather than a step towards investor protection, because investors are going to invest in it one way or the other, but a spot ETF is a way that should be, a spot ETF is something that should be established for an emerging market and an emerging asset class, such as the one that we see here. Let me ask you, T-Shroom, do you think that we're actually going to see a Bitcoin spot ETF in the next couple of years? And if we don't, do you think Grayscale is serious about coming after the SEC for this?
I think they are serious. I mean, I think that they're in the business of creating ETFs, right? And I don't, as the crypto market develops and evolves and matures, most importantly, Grayscale has a stronger and stronger argument for their ETF being safe and for consumers of the United States. And, I think as the SEC, as time goes on, the SEC has a weaker and weaker argument. So in the next few years, certainly, absolutely. I think that it's a pretty high chance, I'd say probably like 60 to 80% chance that we see a spot ETF from Grayscale or from other financial institutions. So I mean, that's kind of my take. It would be very surprising if we're, in 2028 and we still haven't seen a spot ETF. That would be very, very surprising, especially since, we already have them now in Australia and I think Canada. I
think Brazil's working on one also.
Yeah. So as the data kind of rolls out there, and they see, their main concerns, the regulators' main concerns kind of put to rest, and they do have a lot more confidence in this new cryptocurrency that they've had plenty of time to look into and plenty of time to research. I think that they will start to come around and grant Grayscale that ETF.
Hopefully that is the case, and we will be looking out for that ETF. We do appreciate that the SEC has a mandate to try and help protect the consumers, but also at some point, we don't really want you to be protecting us anymore. We just want to be able to invest because we want to have our financial sovereignty, because we want to take the power back into our own hands. You see how it all ties back in to this ideal of financial sovereignty? This is a good example of it. We want to be able to invest in Bitcoin and cryptocurrencies using the methods that we know are going to be best for us. And if we do have spot ETFs be approved, that opens up an entire new class of investor who otherwise might not feel comfortable enough to invest in Bitcoin and cryptocurrencies because they don't have a regulatory framework around them. They need to be approved. With all of that said, those are just a couple of updates, headlines that we wanted to bring you. We need to jump into some TA now. Let's go ahead and look a little bit at Bitcoin. Then we're going to analyze some Ethereum as well. Bitcoin right now is trading so sideways, it's not even funny. This looks like an EKG right now. We're just going up and down and up and down and up and down. This is a trader's paradise if you're down on the hourly chart, but it is an investor's and a casual spectator of the market's worst nightmare because it's boring. The market right now is boring, and that's not a slight against the market. That's just me speaking boldly and honestly. Bitcoin's price, not necessarily its fundamentals, but its price is quite boring right now. Here's the thing, though. If you are able to weather the storm of boredom, if you are able to weather the storm of a downtrend, if you are able to weather the storm of FUD, good on you. Why? Well, here's the thing. If you are somebody who is going to walk away from crypto when it gets boring, or that you're going to walk away from crypto when it gets scary, then I'm here to tell you that your mettle in the space is going to be tested during the tests. Right now is a test. Are you willing to at least keep your finger on the pulse of Bitcoin and crypto? Maybe not be as active in it as you were, but at least keep an eye on it. Or are you going to pull out and walk away and you're going to go invest in something else? If you do, great, good for you. I hope that you make money there, and I hope you're able to find financial sovereignty there. But I honestly don't think there's anywhere else in the universe that you can find financial sovereignty in the physical world than in Bitcoin, because I don't know of another single asset that you can invest in that will retain its value into the future and that puts your financial sovereignty fully into your own hands other than Bitcoin. There's a lot of cryptocurrencies that wouldn't even bring you financial sovereignty, in my opinion. So what I need you to understand, and what the underlying theme of this stream is that what we're seeing going on with Ethereum and its test, what we're seeing going on with the spot ETF and Grayscale, what we're seeing going on with the ECB and the Federal Reserve and interest rates and inflation and the completely jacked up system that we have financially, the entire underlying theme of this stream is that Bitcoin is the answer to one of the largest fundamental financial problems that humanity has ever faced. Number one, the inflation of currency. Number two, the removal of financial sovereignty from the individual and put on the state. And number three, the inability to preserve your wealth into the future due to that first problem, which is inflation. Bitcoin is the answer. There is no other comparable answer. No, not one, not even close. We talked about that with Michael Saylor. If you want to go back and watch that interview, I would highly encourage it. So that's why we're looking at Bitcoin here. So if you're looking at Bitcoin, you're thinking, oh man, this is boring. You missed the point. The point is what I just said. The point is when it's boring, it's testing you. Do you actually understand why Bitcoin? Because if you do understand why Bitcoin, then you're going to see Bitcoin trading sideways and say, okay, cool, whatever. It's going to keep moving because this is what we're building. Let me ask you a question. Is a man patient when a man has nothing testing his patience? Is a woman calm when nothing's testing her temper? The question of whether or not you have a temper or whether or not you're patient, the answer is revealed when you are tested on that. So right now, if you're bored in the market or you're downtrodden in the market because the market's down into the and moving sideways, right now is a test of whether or not you have actually rooted your belief in cryptocurrency in the why Bitcoin, which is the actual good news of crypto, or in the price action and the excitement of it. Because I think most of you guys do get it, or else you would have left by now. But the 75% of the retail that's gone, they didn't understand. And the ones that did stay are the ones that understood that question, why Bitcoin? So speaking of why Bitcoin, let's also talk about what Bitcoin. What is Bitcoin's price doing? It is currently trading sideways, and it is currently in a bear flag. You can see right here that we have an uptrending level of support at this price level and a downtrending level of resistance at this level right here. We saw this downtrend start right here on May the 4th, 2022, and we have also seen that this bear pennant would give us a price target that would push us all the way down to $22,000. If we were to break down relatively quickly, that would potentially be a good thing because it would be a bottoming out on Bitcoin. Don't forget that our long-term technical analysis tells us that the bottom for Bitcoin is likely just north of $22,000. $22,500 is where our 200 weekly simple moving average is sitting, and that is where we believe that we are going. And to be honest with you, that could happen sooner rather than later. If that bear pennant continues to play out, then we very well could see a drop to the downside. The thing that I'm concerned about right now for the bulls is that we have seen Bitcoin bottom out down here around 26.5, and the bulls were not able to find any strength. Back here in January of 2022, we still had more retail. Many of them had not been shaken out yet, so there was much more eager money sitting on the exchanges, ready to provide liquidity for the market, ready to pump the market. We dropped down here, and then we bounced higher than we started. Notice how we bounced higher than we started. That's very important, but we did not manage to do that over here. We pulled back from $40,000, and over the course of 3 weeks, only managed to bounce to 32. That shows me anemia in the bulls. That shows me weakness in the bulls and strength in the bears. It shows me that the bottom has not yet been found, because if the bottom had been found, either one, we're going to trade sideways down here for the next several months, which is a possibility, or two, it could mean that we need one final shakeout. You hear people say one final shakeout quite a bit, and then, more than one can occur, but I really do think that we may be only one final shakeout away if that shakeout does lead us low enough. I'm here to tell you, based on YouTube viewership, based on new subscriber growth in the YouTube markets, based on how much retail is in the space, based on literally there are dozens of metrics that we look at. Short-term hodler ratio, long-term hodler versus short-term hodler ratios, all these on-chain metrics and data that we look at. Many of these things show us that much of the retail has left the space, meaning that we are getting down to the rock bottom core. Let me point something out to you. When you build a building, you drill the foundation all the way down to bedrock. The foundation of a city is not at the topsoil, it's at the bedrock. What we have left in Bitcoin and cryptocurrency is mostly bedrock and a little bit of topsoil. The topsoil are the investors that got into crypto for the fast money. They got in for the wrong reasons. But a flood's coming in and wiping them away and pushing them away. But now we're getting down to bedrock. And once we hit that bedrock, then we'll stop moving down. Where is the bedrock? The bedrock's probably sitting around $22,000 to $23,000, maybe $25,000. If you're watching this stream and you understand why Bitcoin, then you are part of that bedrock because you are immovable and you are going to be foundational support for the industry. But if we try and build our foundation on 25% bedrock and 75% topsoil, and we don't drill down to the bedrock and we don't let the topsoil go away, then we're gonna have a weak foundation. And that's what we need to see. We need to see the market keep drilling down until we hit the bedrock and reestablish where the bedrock is. Back in 2018 and 2019. The bedrock was at $3,300. Here in 2020, the bedrock was probably around $5,000 or $6,000. Then we drilled pretty far into it because we had a lot of force. Here in June 2021, the bedrock probably wasn't at $30,000. It was probably down around $15,000 to $20,000, but there was still a lot of topsoil that didn't get blown away. Now we're seeing Bitcoin drill down to the bedrock. Bedrock is an analogy for what I'm talking about when I say underlying intrinsic value. How is that built? That is built by people that understand the good news of Bitcoin, which is that it leads to financial sovereignty, and the fact that Bitcoin was created to deliver these things to the masses, which are us. If you understand why Bitcoin, you are part of the bedrock, and you are part of the reason that Bitcoin will probably maintain above $20,000. T-Shroom, I want to hear your take on some of the technicals. I've been kind of rambling about philosophy. I think it's important, but what are some of the things you're seeing on Bitcoin, and maybe you can give us a little insight on Ethereum if you have anything to say on that.
Yeah, absolutely. I have not been really tracking Ethereum very much. I've only been looking at the kind of the fundamental story of the testnet going live today, which was really exciting. A bunch of people actually last night I saw were in a big Zoom chat and all, very excited to see that testnet go live and actually succeed, which is a pretty big deal. But if you want to go to my screen, I've got a little something here for the traders. It was something that I was watching yesterday. It's this bear pennant. Bull pennant, sorry, that actually broke down to the downside, and right now we're seeing it break that resistance, and it was a lot lower than it is currently. It's got about an hour and a half until that candle prints fully, so it's unlikely that we'll see what I predicted happen, which is a break to the upside and then a fake breakout that would just kind of waver and come back down. It looks like it's going to go ahead and kind of break early out of that pennant. It's a weak pennant, but that's kind of what I've been tracking. So if you're a shorter term trader, that's something you can kind of be looking at, and that's really about it. The only other thing I was tracking was the RSI on the 1 hour, and if you look at that, there was a return. It's continuing to return up to that 50 line, and that's very encouraging. It's done that a bunch of times. So if this is really only for short-term traders, if you're looking long-term, this is largely irrelevant to you, and I would make that very clear. But full screen. I mean, it's at the shorter time frames, right? You can buy low and still sell high, and that's kind of what trading is for folks who don't know. You don't always have to just buy and hold. You can do what's called trading or swing trading, where you're buying low at a low time frame and you're selling high. Like right now, if you go back to my screen, I'll show you. What you can do is you can see right now we've broken out of this pennant, right? So what more than likely we're going to do is we're going to go back up and confirm that we've flipped this support line, and we flipped it into what's called resistance line, and then it's going to go down from there. And because we're in this channel and we're really just waiting on the fundamental news from the Fed, more than likely we'll bounce back off of this support and come back up and have nobody else buy in this zone, so it'll come back down from there as well. So. There's you can go back full screen. There's my chicken scratch technical analysis on the 4 and 1 hour. Hopefully some traders are able to take something away from that. But again, if you're more of a long-term investor, hodler, which is overwhelmingly kind of what we recommend for beginners, and I use that term recommend very loosely because this is not financial advice, but this shorter term analysis is largely irrelevant to investors.
Absolutely, and that's why it's so important that you guys understand what Bitcoin is rooted in. It's so important that you understand that the foundation of the bedrock that Bitcoin is built on, like the core of the earth, if you want to go really far with the analogy, is that core good news of Bitcoin, which is the simple fact that if you want to have financial sovereignty, if you don't, you might be in the wrong place. If you're just here for a quick buck, I'm here to tell you, yeah, you can make a quick buck in Bitcoin. You can also lose your entire life savings in Bitcoin if you're not careful. There's a lot of money to be made here, but there is high risk. The root and the core and the seed that all of crypto is built on is this idea of financial sovereignty. That's why we have been screaming it and preaching it from the rooftops. I wish every single influencer, every single news station, every single outlet that talks about anything Bitcoin would use that term. Go spread that term. Go tell your favorite influencer. Go tell people. Use the word financial sovereignty. That's what Bitcoin was made for. That's what Satoshi Nakamoto built into the code, which was the financial sovereignty to put the power of our currency back into our own hands or into the hands of a trustless third party, which is code, which does not have emotion, which is not going to try and manipulate you, which is not going to be self-servant. It is simply code. The sovereignty was taken from the currency manufacturers, the Federal Reserves of the world, and the ECBs of the world, and the U.S. Treasury Departments of the world. It was put into one of two hands, either code, which is extremely difficult to change and virtually impossible to hack. It spreads like a virus all around the world and is completely and totally indestructible unless you shut down the entire internet and send us back into the Stone Age. Or two, is put into the hands of the investor. That's what financial sovereignty is. Some of that financial sovereignty was put in the hands of trustless third-party code, which cannot be altered or tampered with unless it's been given a supermajority stamp of approval by the miners, or it's been put into the hands of us. That's what Bitcoin was founded on. The bedrock is built on top of that. Bitcoin will only go so low until the people remaining in the market that understand why Bitcoin. This took me years to understand. I was running a YouTube channel. I had all kinds of followers, and I didn't even understand this root nugget of this core principle of financial sovereignty until, a year ago. And then I started putting it into words. If you understand that, then you will be part of the bedrock. If you understand what financial sovereignty is and you believe in it, you will be part of the bedrock, and I encourage you to be. Guys, if you're enjoying today's stream, make sure to smash that like button. I know we can get over 500 likes here in the next couple of minutes. If you're new here, make sure to hit that like button, subscribe to the channel, hit the post notification bell for all kinds of updated content coming out daily, and make sure to follow us on our social media at CryptoJebb and at CryptoJebbOfficial. We're going to jump into our stories concerning the European Union, the European Central Bank, and the fact that they're about to raise interest rates, their equivalent of the federal funds rate, for the first time in 11 years, and what implications that might be having on the Bitcoin and cryptocurrency markets coming up after the break. Let's go ahead and read some super chats before we get into it, though.
Yeah, absolutely. Well, there are not a ton of super chats, but I have identified a couple of chats that may provoke some interesting banter.
Do it.
So Storm Detector said, "Can you see T-Shroom doing yoga classes? So calming." And then there was another one that said that I could have been the Gerber baby, which is probably one of the highest compliments that I think I've received in a very long time.
Somebody in chat keeps saying that you probably were a cute infant.
Wait, look at the camera.
I could actually see that. He is the Gerber baby. You are the Gerber baby.
Yeah, I'm gonna be one of those old men that looks exactly like his baby picture.
T, the Gerber baby shroom. That's his name now.
I think that might be the case
now. That's your equivalent of definitely not high Zach.
Exactly.
You're the Gerber baby shroom.
The Gerber baby shroom. That is profound.
And then we did get a super chat. Not that I am not thoroughly enjoying this conversation about my infancy, but Scott has donated $10 and said, "I currently have a Roth IRA. Would it be smart to roll it into an iTrust Capital Roth and invest in Bitcoin/ETH? Is now the time? Would you recommend buying and selling bottom tops within the IRA or just hold?"
I think it is a wonderful idea to roll it into iTrust Capital. And the reason is iTrust Capital is the #1 provider of IRA services and retirement account services in the entire cryptocurrency space with the lowest fees. You can transition everything over into iTrust Capital for, I believe it's 1%. It is the lowest fee of anyone in the entire industry. And if you're talking about transferring in the traditional markets, it's normally 10%. So they're undercutting everybody. Make sure you check out iTrust Capital. Links in the description. As far as what I recommend basically trading within the IRA, I probably wouldn't. It's a retirement account. The whole point of it is to build up slowly but steadily and surely over time. I would personally, and I'm not a financial advisor, I do encourage you to take that question to a financial advisor. I would personally dollar cost average into that. Normally IRAs, I think you can contribute $6,000 a year. That's a perfect amount to dollar cost average. That's, what am I blank? That's $500 a month. That's $125 a week. That's 16, 17, 18 bucks a day. Do that. That's dollar cost averaging territory. That's wonderful. So I would DCA. I wouldn't be trying to trade in that personally, but you could. It would protect you against taxes big time, and there are people that do use it for that because it shelters you from the taxes on each individual trade. So that is an option. It comes down to your preference. Are you more of an investor or are you more of a trader? Because there are benefits to both. Great question. And by the way, also thank you to Siobhan Golay, who just donated. We also have a donation from SimpleMan699. Jebb, what's the next update regarding ADA after the Vasil hard fork? T-Shroom, you might actually have some information on that. I haven't looked at the roadmap that far out recently, so I can do that.
Yeah, sorry, I was copying and pasting a different. Oh, that's what I was copying and pasting. Jebb wants to know what's the next update regarding the hedge fork. Well, there aren't any updates. It's on set. It's set schedule to go live on the 29th, if I'm not mistaken.
Yes,
there hasn't been any alterations to that.
Yep.
So that's the update. Is full steam ahead. There's a possibility you didn't know that the hard fork was going to be on the 29th, but that's what it is.
I think what he's saying is do we know what the update is after the Vasil hard fork launches?
I don't. I've been very focused on the actual Vasil hard fork itself.
Yeah, we've both been pretty focused on the Vasil hard fork itself because that's what's coming up immediately. We do like keeping track of things like that far out, but we want to make sure that we're keeping track of what you guys need to know right now. So that's where we focus the majority of our research is into what you guys need to know right now. But good question, and we can get back to you on that. Yeah. And we will definitely be covering any updates that come out to ADA.
Yeah, absolutely. I can tell you that there's if you go to roadmap.cardano.org.
That's where I was just now.
You'll find a very robust map that is created by the legitimate Cardano roadmap team.
Yes, you will.
Which is the team for you.
It would be right here. So there you go.
And then to wrap up our super chat section, we've got a 20 units of foreign currency donation from Siobhan Golay.
Yes, thank you, Siobhan. Really appreciate that, guys. All right, good deal, guys. Well, we're going to go ahead and jump into our next part of our story, and this has to do with the European Central Bank. Take a look at my screen here. You can see the Eurozone interest rates going back to 1998. Back in 98, they were at 3%. Then here in 99, they dropped down to 2.25, 2.5. Then they raised to 4.75, dropped to 2, raised to 4.25. 08 hit, they dropped. Then the last time that interest rates were raised in the Eurozone by the European Central Bank was in March of 2011, and then again in June of 2011, and they raised up to 1.5%. Then from 2011 onward, they dropped all the way down to 0. Ever since 2011, the only changes that have been made to the Eurozone interest rates, the Euro area interest rate, has been a negative. It has been moving to the downside. This is why you've seen such inflation in different currencies in the Eurozone. If you look at the euro over the US dollar, we can go to all here. Look at the Forex markets. The euro, ever since that time, has been losing a lot of dominance against the US dollar. You can see that the euro back in 2011 here was sitting at $1.45. Now it's sitting down at $1.06. It is inflating faster than the US dollar, and part of that has to do with the fact that it was that its interest rates were a lot lower than they were otherwise. So then we also look at the inflation, the euro area inflation, and then also the United States inflation rate of the US dollar has jumped meteoric through the roof. Inflation was actually negative at the end of 2020. Inflation was negative. It has jumped all the way to 8.1%. In all of recorded history, going back to 91, the fall of the Soviet Union, we have never seen interest rates move this quickly to the upside before in the euro area. The last time we saw interest rates raise this quickly on the US dollar, you can see right here, we've raised 3,500% in the span of just under 2 years. The last time we saw inflation raise that quickly was a very long time ago. In fact, we've never seen it rise that sharply, that quickly, at least as far as I can tell, going back even to pre-war era. This is a massive amount of inflation. You could argue that there may have been that much inflation going on here in just after the Second World War because there was so much, because they were at 0 for a long time. You can even see the baseline here. It doesn't show up on the chart, but I'll show you. This is 0 inflation. This is perfectly sideways trading. The U.S. economy and the Eurozone have been shooting for 2% inflation for the last 40 years. And for the most part, at least from the way the CPI is calculated and from the calculations that the euro area has, they have more or less been achieving that goal of 2 to 3% inflation year over year. The problem is, one, When you inflate the economy 2 or 3% a year, you are devaluing the currency 2 or 3% a year. You're putting a 2 to 3% a year tax on everybody, putting it back into the hands of the central government, taking financial sovereignty from you, and then devaluing the currency for future generations, making it impossible to store wealth into the future. The entire concept of trying to build an economy around 2 to 3% inflation is literally like saying, I make $5,000 a month. I am going to spend $5,500 a month. Where am I going to get the extra $500 from? Well, I'll just borrow it from myself from 10 years from now. And then I'll keep doing that. And then I'll keep doing that. And then I have this massive $100,000 debt that I can never pay back because I've been running a deficit. That's what we're doing. We're trying to stimulate our economies by saying, okay, yeah, we can manage 2 to 3% inflation. And then what we do when we raise interest rates, because it does hurt the economy in the short term, is we basically say, hey, we have a bullet hole wound. Here's what I'll do. I'll cleanse it by pouring gasoline in it. And then they come in, and the gasoline makes the infection even worse. Sure, it sterilizes of what was there, but then you have another problem. The problem that you run into is that when you start manipulating a currency, it never gets right. It is an unstable system. And this is going to be a weird analogy, but you guys know I'm the king of them. Fighter aircraft. T-Shroom, you probably are familiar with this concept because you're in the Army. But the fact is, what planes are built to be unstable. Fighter aircraft are built to be unstable so they can roll very quickly. Whereas something like a commercial aircraft is built to be stable. What does stable versus unstable mean? Unstable means you start rolling off course like a bicycle, you're going to fall over. Stable means that it's self-correcting like a ship. If it rolls over, it's going to come back. Commercial aircraft are supposed to be stable because they're supposed to fly through the air, right? They're not supposed to move a whole lot. Fighter aircraft are supposed to go boom, boom, boom. They're supposed to be very agile. The problem is that currency manipulation is an unstable system. It is not auto-correcting as a ship is auto-correcting itself back to being upright. It's not auto-correcting in the same way, one of those dolls that has a weight in the bottom, you push it over and then it stands back up. It's not like that. You push the market over by raising interest rates, raising inflation, by manipulating it, and the whole thing comes crumbling down. The further that something falls over, the harder it is to prop it back up. And you know where you get the strength to prop it back up? By stealing from your future self. And that's what the Eurozone and what every major economy is doing right now. They've built an unstable currency system because they're poking it and prodding it. Leave the thing alone. Let it stabilize. Stop trying to push it over. Get the thing standing straight and stop messing with it. That's what the Bitcoin network has done. It has built the first stable, self-regulating currency economic system that has ever been conceived in the history of mankind. There's never been a self-stabilizing system before. Now there is. That's why Bitcoin's so important, and that's why these interest rates are so important. Because when you see the interest rates go moonshotting like this, they're not going to auto-correct back. Remember what I just talked about. It's an unstable system. It's not a stable system. To fix the interest rates, you have to do something, or they're going to continue getting out of control. What are they doing? Well, here's the big idea of what we're talking about. The ECB has held 0% interest rates despite runaway inflation. July, though, that's going to be changing. It just came out this morning that in July, we are going to see a 25 basis point hike, and then in September, we could see a 50 basis point hike on the Eurozone, on the Euro, and on the European central banks. Inflation in their nation currently stands at 8.1%. In the United States, it currently stands at 8.3%. Inflation is absolutely runaway. So I want to talk about this a little bit, T-Shroom. Why do you think the ECB has kept interest rates all the way at zero, even 2 years into the money printing and into the pandemic?
Well, they want to keep the economy stimulated there, and in theory, 0% interest rates keep the economy flowing from a Keynesian economic perspective. Jebb emphasizes this strongly. I'll reiterate my own way. The Keynesian economic filter or lens, so to speak, is very different from a common sense, just pure balance sheet standpoint. Keynesian, they rely a lot more on debt, and they rely a lot more on centralization and control and authority of money supply and bond issuing, whereas I guess you could say the Austrian school of economics focuses more on just let the market balance itself out. And what Bitcoin does is it kind of transcends even the Austrian economics to become an even superior instrument for the market to balance itself out as a currency. So why has the ECB kept their rates at zero? Well, looking through the Keynesian frame, you can see that this, through their logic, what has worked for them in the past according to their own theories, is that it stimulates the economy to keep interest rates at zero. Why? Because a startup company can go out and get loans at very low rates and start a new business, which employs people, which creates new jobs, which generates more income for the economy and grows the GDP. And that's a rate that central banks really, really care about. So in theory, the Keynesian economic theory, keeping the interest rate at zero, which is what the ECB has done, will stimulate growth, and it will grow the economy. And now they're talking about doing something that is the opposite of that, which is really interesting, and they have the reasons why. I'm sure we'll talk about it more.
Absolutely. So here's the thing, guys. The European Central Bank wants their cake and eating it too, which that expression never made sense to me, because if you're going to eat cake, then you need to want cake. That makes no sense.
Just makes me hungry.
It just makes me hungry. I want some cake now. We're going to have to get some cake after the stream. Anyway, the point is they want their cake and they want to eat it too. They want to stimulate the economy by maintaining virtually zero interest rates. Levels on their interest rate. They've done that for the last 2 years, but they also only want 2% inflation, because that's what a lot of the federal banks around the world, the centralized banks around the world, have described as the ideal inflation. Not too much to undermine your currency, enough to keep up with the rest of the world, but not so little that you can't afford to continue to pay for things out where, because we don't actually have the money to pay for things, so let's just borrow from the future. They want to keep a 2% inflation as they had maintained for a very long time. The problem is that when you don't raise interest rates, then that can't happen. So we're seeing that the Eurozone is starting to realize, wait a second, if we want 2% inflation, then we need to cut our balance sheet, and then we also need to lower interest rates. Here's the thing you need to understand. When you make money cheaper, it actually makes it less stable. When you make money more expensive, it actually makes it more stable. What am I talking about? Well, when money is cheap, i.e. interest rates are low and it's easy to borrow, it's cheap to go borrow money because interest rates are low, that makes the money unstable because it's very easy to circulate. Under a Keynesian model, the more circulation, the more inflation. Monetary velocity in the economy has a very big role to play in inflation. It's not just the supply of the currency itself. But when you raise interest rates and you make money more expensive to go and get, making it harder to go and get loans, it actually slows down the inflation because it slows down the economic activity in the market that is based on debt. And it forces the market to start investing more in things like bonds so that you can actually start making money yourself. But then the government's just borrowing from you, so it actually kicks the can in the wrong direction if you raise interest rates too much. And then it also allows the currency to be more stable because people, instead of spending money on debt, they're actually spending money based on savings and investment. So that is a wonderful thing. There are their pros and their cons. When you lower the interest rates to nothing, you stimulate the economy and you get it moving again, and it theoretically anyway, helps you to get through the hard times. When you raise interest rates, it makes the times a little bit harder, but it stabilizes the long term. So it's a short-term versus long-term play. Low interest rates is short-term. Benefit of short term at the expense of the long term. High interest rates is hurting the short term at the benefit of the long term, which is why you see the governments of the world gradually lowering interest rates down to zero, because they want to be able to print money now so they can fund all their programs to get them reelected. That's why they want to keep interest rates zero, so that they can keep a ton of money coming into their own pocket, so they can keep growing government because they want more authority. I understand there's a lot going on here, but that is the train of thought that we're looking at. The problem that we need to face is that when you start trying to manipulate a currency for your own good, you've opened Pandora's box. And until you get a different box, the box is going to be corrupted. Bitcoin is a closed box. Pandora's locked in there under a $500 billion code network and infrastructure that is the most secure, most unhackable network in the entire world. And by the way, it's designed so that if you ever did open Pandora's box and you had the ability to manipulate the supply, it would lose all of its value overnight, because that's where its value is placed. That's the point of Bitcoin. You never open the box. You never open the box of supply manipulation. You never open the box of centralized authority over the inflation. There is no inflation mechanism on Bitcoin that can be manipulated. The only inflation mechanism is the mining, which is cut in half every 4 years. Bitcoin is the answer to this system, because what we've been doing for the last 5,000 years is trying to issue centralized currencies and then let the rulers manipulate them as they please and play puppet master, when the system only works properly if you let the system go and you stop trying to treat it like a creation from mankind and start treating it like a force of nature with laws that are locked in place and immovable, such as the issuance of the currency and the supply of the currency. If you lock those two, and then you're only able to affect things such as the supply and such as the demand, and then the supply based on who's holding it and who's not, then you have a currency that you can actually build a stable government on. Otherwise, you build an entire world that is building their current value off of the theft of the value of the future generations. And that is something that, especially this generation, that is, and I'm not saying I agree with this, but that is very upset with previous generations for quote unquote ruining the earth and, quote unquote leading to a bunch of bad things that have happened in the world. You have a generation right now that's looking at the boomers and saying, you done messed up this planet, and I'm tired of that, and I don't want to do that in the future. We're going to do that. It's a sinful world. But the point is, you have an entire generation that's saying, these guys that are 40 years older than me mess it up for me. Again, I don't have that opinion. I'm just saying that that's common in our generation. They're saying, I don't want that to happen to the future. Let me invest in Bitcoin so that, one, I'm not part of the problem, and two, if that problem does persist, then I have the solution at my fingertips. That is why Bitcoin is so important, and that's why the European Central Bank's decision is so important, because when they're manipulating the currency, yes, it's going to have a short-term impact on Bitcoin. What's that short-term impact going to be? It will probably slow down the ability for people to have circulating money in their investment. There's been studies come out. We actually know a blockchain researcher at the University of Florida just came out and told us that, this isn't published in a paper anywhere, we were told this personally, that consumer spending on investment has gone down, but consumer spending on consumer products has remained the same. Investment in markets has gone down. So people are investing less as interest rates are going up and as the economy is probably starting a recession and moving into stagflation. The problem is that when that does turn around and we do eventually see interest rates go up and inflation go down, people will turn and say, hey, look, Bitcoin was the paradise that I could have hid through this, and next time I want to be in Bitcoin so that I can hide through this. So, T-Shroom, why does all of this matter? Why does it matter that the European Central Bank is raising their interest rates, and what does it have to do with Bitcoin?
It's a good question, Jebb. Well, I am a Fed, central bank, ECB nerd. Like, I love to follow this. I love to watch. I love specifically the language that the Fed uses. It's always extremely, extremely tailored and crafted to hit a certain message and also to speak to multiple audiences at once. So why do we cover it here on the Crypto Jebb channel? Well, there's what's called DeFi, which you're very familiar with if you're in the crypto space, decentralized finance. And then there's TradFi, traditional finance. These are emerging terms. I tend to like them if you don't like them because they're, all-encompassing or too generalized. That's fine for you, but we like to use them here. The TradFi system is still extremely, extremely strong and influential. There's, there's almost an infinite amount of trillions of dollars and market cap within that system. But slowly there is an alternative to that system that's being introduced, and that is Bitcoin. Well, so back to that TradFi system, at the core of that system, there is the interest rate. And that interest rate really, as we have been talking about, that is what determines the velocity of money or the money flow or the supply of money in a system. And it's almost like a human body. If you were to cut out or decrease the rate of blood flow in the human body, that body is not going to work as efficiently, or it's not going to reach peak performance. Whereas if you pump the body full of more blood, there's more nutrients that can flow throughout the body. Now, I'm not a doctor, so I'm not getting that analogy perfectly right, but you can kind of follow what I'm saying. And the core of this is we're trying to understand, why do we talk about this? Why do we harp on the ECB rates and the Fed rates that are coming on the 15th? Why do we anticipate them? Because they ultimately affect greatly the stock market and the bond market, but they also affect crypto as it spills over. And as we're in this time where there's a very strong correlation between crypto, specifically Bitcoin, and the NASDAQ. And that we've been seeing signs of that decoupling of crypto and the NASDAQ. But for now, it's safe to assume that those are going to run in tandem. And so when the Fed and the ECB, they come out with these rate decisions, that has a direct effect on the price, because the bulls and the bears read that data as looking into a crystal ball and seeing which way the economy is going to go. And it doesn't mean that everybody's making the right decisions. Certainly, as Jebb has laid out, the system is very flawed. But at the end of the day, there's people that are still continuing to make the decision to have babies, raise families. And so it's a system that works in some sense. And it's a system that has worked and has led to the prosperity that we know in America and in a lot of the world. However, there is a new system that is emerging, DeFi, which is decentralized, and it focuses on taking the authority of the money supply away from human beings. Not that it should be given to the Russians, or it shouldn't be given to the Americans, or it shouldn't be the Chinese. It just takes it out of human control in general, so that it can just exist in a predetermined code protocol that is Bitcoin, that is Ethereum, that is all these different cryptos that will emerge as different pieces of the DeFi space that will provide value to the financial markets. Now, just to sum it all up, why do we care about the Fed? Why do we care about the EDC? Because in the short term, in the present, in the now, they still have a very big influence on the price of Bitcoin, put simply.
One of the things I've learned as a father is that we're all just a bunch of children. We just have more pride. We're all very childish. And not in the good way of having childlike faith, but in the bad way of being childlike and immature. And what we do when we run with scissors when we're 2 or 3 is the exact same thing that we do when we're 80 and we're running around manipulating the currency. We just have more pride, and we think, oh, well, I have this degree. I know what I'm doing. I don't have this childlike humility. Where, hey, I don't know. Let me listen and try and learn from this person. First of all, keep that childlike humility, but also realize, if you have a kid running around with something sharp, if my son ever puts his hand near an electrical socket, I grab his hand. I'm like, no, don't do that. Bad. You will shock yourself one day if you're not careful with that. In the same way that I pull my son's hand away from the electrical socket, let's pull the power over the supply of our currency out of the children that are running it. That's why Bitcoin. Now, let's ask a couple other questions. One, T-Shroom, let me ask you this. Why does this channel keep covering interest rates? I think you pretty much just answer it, but rehash it for us so people know.
Yeah, no, absolutely. Well, I mean, the long and short of it is because interest rates have a direct effect on the market, not just the crypto market, but also equities and the bond and even the real estate market, especially the real estate market, actually, and the car market.
Yeah.
Any commodity that folks are out there buying and selling is influenced, the price of which is influenced because we have learned as business operators that you can go get a loan to go purchase a higher quantity of that good that you use to create value for the economy.
Yep.
And those the cost of those loans are determined by those interest rates fundamentally, because those interest rates originate from the big banks like Goldman Sachs, Morgan Stanley, JP Morgan, and so on. And they originate their interest rates from the Federal Reserve. Obviously, you copy and paste that same system to the EU. And see if I can do this. You have Berkeley Bank, and you have, what are the other banks? What's that German one? Starts with a D, whatever.
Deutsche Bank.
Deutsche Bank. Yeah, it's all the same system, copied and pasted over to Europe, and they derive their interest rate eminently from the ECB, the European Central Bank. So, I'll jump ahead to the next question just for the sake of time. Will this influence the Fed's decision on the 15th? The 15th is right on our heels here. And we are greatly anticipating that. It's a much bigger decision. The Fed accounts for a much larger market cap.
Well, not by much, though. The United States makes up 25% of global GDP, and the Eurozone, because now the UK is kind of not really totally in that, makes up about 20%.
Right. So
but ECB doesn't have world reserve currency status, and that's a big part of it, too.
Right. So maybe not much bigger, but certainly larger and more important for global markets, since New York is the financial hub as well. Yep. But London does seem to be emerging. Okay, we can talk about this at end. But I personally don't think that the Fed will adjust their steady rate, what they've said they're going to do, which is to continue to increase by 50 basis points going on into the future. Through the end of the year, certainly. And I just don't think that they're going to change that based on this. I think that if they were to be influenced by this, that they would just go higher. They would not go lower. They would become more hawkish, not more dovish. But again, I'll reiterate that they more than likely will just stay at 50. And that's what the result will be on the 15th. What's really much more interesting for me to see what is the balance sheet side. I think that the balance sheet side is going to be a much bigger story this time around, and we'll be covering that in depth on the 15th. So stay tuned to that. But if you want to, read up and really research the balance sheet side, the Fed really has two tools. Central banks really have two tools. It's their balance sheet, which they use to buy assets, mortgage-backed securities, and corporate bonds, different things that they like to buy to try and balance out the economy, and they're in their interest rate. So that would be the answer to what is the Fed going to be influenced on the 15th by this ECB decision?
Yeah, and I don't think they will be. Just looking back at history, as you can see on my chart here, this is what T-Shroom's talking about. Every time the U.S. Federal Reserve goes on a rate hike spree, they normally keep it at the exact same velocity the entire time until they stop. That's what we saw happen in 16 to 18. That's what we saw happen in 04 to 07, from 99 to 00, from 93 to 94, etc. They typically maintain a pretty steady rate. They might skip a period of raising, or a couple of them, but generally they keep it about the same. And as you can see, this is just a side note, the Federal Reserve already realized that interest rates were too high, because interest rates started dropping in June of 2019, long before the pandemic was ever a known factor, before we'd ever had a single case of it. So we were already heading into this. The pandemic just made it a lot more applicable. So we're about to jump into our application, but first I want to bring you just a quick word from one of our sponsors, guys. Link2 is a phenomenal platform, and you should definitely use them. Check them out, link2linqto.com. They offer the average investor access to the world's top unicorns, aka private companies with greater than $1 billion in valuation. Traditionally, only 2% of the world's accredited investors have had access to these private markets, and those elite investors have made an average investment of $7.5 million. But Link2 is democratizing private investment by offering private shares of companies like Ripple, Uphold, Dapper Labs, BitPay, and BlockFi for a minimum as low as $10,000. Given pending recessions, inflation, and the volatility of public equities markets, more investors are exploring these private markets. We can't promise every link to investing will go public, but the company has a fantastic track record, including exits like Coinbase, Robinhood, SoFi, Marqeta, Innovium, and NerdWallet's coming out soon. On a credibility note, Link2 is compliant in over 100 countries globally, and has over $120 million in investment on the platform. Go to their site and automate the SEC's process to become an accredited investor today. Guys, the reason we love Link2 so much is because they are doing what Bitcoin does in a different realm. They are bringing financial sovereignty back to us by allowing the individual to be able to invest in these private companies, where 90% of a company's returns are ever going to be made. So make sure you check out Link2, linqto.com, links in the description box down below, to invest in some of your favorite companies before they go IPO, so that you don't miss out on all of the gains, because again, most of the gains that a company will ever make happen long before the IPO ever happens. Let's go ahead and keep moving on here, though. We have a little bit more to cover. What is the application here, T-Shroom? What do we do with this information about the Eurozone raising interest rates? And what would you say the state of America and Europe is financially right now?
Well, it's not looking good. The U.S. is in quite a pickle. You're seeing a lot of headlines the U.S. is heading for a recession, but the EU is in a much bigger pickle, unfortunately, and it's not looking good. I mean, they've got a war on their front, folks, and that not only is terrible from a humanitarian perspective, but that also raises the cost of goods quite a bit in just that area. In Estonia, interest rates are at 19%, right? So that 8.1 inflation rate that we've been hearing about from the EU, that's an average, right? So there's states there that are suffering 19% inflation. Estonia, on the border of Russia, right there in the action, heavily impacted by what's going on in that war in Ukraine.
Yes.
But it's in a big state of disarray. Global economic systems right now are very fragile, very precarious, and they were already in that state as a result of trying to counter off the negative economic effects of the pandemic. So it's very precarious. You need to pay hyper attention to your finances right now, and we're saying a lot of important things, but you also need to have a diversity of information that you're taking from on the economy as well.
So if you have a conviction about Bitcoin, if you feel like, hey, I think I'm starting to get this, I think this is starting to click, I think I'm starting to understand, wow, this financial system that I have grown up around and that I've known my entire life is broken, then I encourage you to buy Bitcoin. That's not advice, but it's encouragement. Yeah, that's your decision. I'm not making a decision for you, and I would encourage you to seek other opinions, even opinions that disagree with us, opinions we respect, like Dave Ramsey. I'm pretty sure Dave Ramsey doesn't like crypto, does he?
He does not like crypto.
I got a lot of respect for the guy. I might disagree with him, but go check him out. Ask him what he thinks on his streams. Go watch his stuff. Do your research. Do your real research. I'm not just talking about study crypto. I'm talking about study the antithesis to crypto. Go study in Keynesian economic models. For all I know, I could be wrong on everything I've ever said in my entire life. There's only one truth. That's the Word of God. I could be wrong on every single other thing that I've ever stated. So go and cross-reference what I'm saying. Go get a cross-examination of what we're saying about Bitcoin and crypto. Go do your research. Go find out if we're right. But I genuinely do believe that we are the automobile to the horse-drawn carriage. I genuinely believe that we are the incandescent light bulb to the candle. I genuinely believe that we're the aircraft to the transatlantic ocean liner. That's what I believe we are. I'm not saying the old system doesn't work, but I am saying that it's antiquated and it's falling apart, and it will hurt you. and it is more dangerous than the new system. I remember my grandmother, and this will be my final thought here before we wrap it out. I remember my grandmother telling me the story about how I think it was her mother. My grandmother was born in 1933, so it was probably her grandmother when the incandescent light bulb was invented and it was starting to be propagated. And they had one sitting in the middle of their little dirt floor living room, and they sat there and they looked at this thing for hours. Like, what is this? This is never going to get adopted. This is ridiculous. This is witchcraft, is what people thought. Bring a smartphone back to 1950, and you would get God knows what. It would be bad. People would be like, you're a witch. Burn him. Now look at this. We got smartphones everywhere. We got computers everywhere. We have lights everywhere. We don't light our set with candles. We don't travel the ocean in a rowboat. We use modern technology. When it is first being invented, everybody thinks it's ridiculous because nobody's ever heard of it. That's what people think about Bitcoin. But as new technology has a big enough leg up on the previous technology, it's not just a little bit better, but it's much better. And it's much better for the end user eventually, it will get adopted. And that's what we're seeing happen with Bitcoin. In my opinion, and I am firmly convicted on this, the victory of decentralized finance, or of some version of it, is not only likely, I do personally think it's inevitable. And if you are in this space right now, and you have not gotten into Bitcoin, if you have not gotten into cryptocurrency, I do believe that in 5-10 years, probably even a year from now, probably even immediately, you will regret it. And it's because Bitcoin was designed to take power from central authorities that want to lord over you and put it back in the hands of you where it belongs. Be responsible with that power, because it does mean that you don't have the protection that the government provides, but it does give you authority, and it does give you the power to make decisions for yourself, such as whether or not you are going to be investing in an inflationary currency or not. If you enjoyed today's video, make sure to hit that like button and subscribe to the channel. And make sure to go and tell your friends about, one, our channel, yes, but two, more importantly, about the good news of Bitcoin and what it can do for people. Make sure to go and spread this content and other content that you believe preaches the good word of Bitcoin, if you will. And help to support the channel by dropping super chats, by following us on Instagram and Twitter at CryptoJebb, over on TikTok at CryptoJebbOfficial. T-Shrum, do you have any final thoughts before we wrap it out?
Oh, well, really excited for the 15th. You know,
Me too.
The Fed's going to be issuing their decision, and you know, we'll be coming with a similar message. You know, really raking through the implications of what that rate decision is.
Yes, absolutely. Well, guys, very much appreciate everybody watching. Before we go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.